The diamonds, the gap is sealed. The Liberation Day gap is finally sealed. Lower highs is, the series of lower highs is still in place, but we have pushed well above that gap. So don't mean nothing no more in terms of resistance. The overhead supply is much thicker now that we've gotten up here. But the next big event, of course, is going to be this weekend, because they're slated to, U.S. and China are going to talk, and there's nothing scheduled, but I'm confident Saturday or Sunday they'll come out and say positive things. We had an earnest exchange of ideas. We're starting to work on a framework. Things are going well, et cetera, et cetera. They're not going to be like, screw these guys and storm off. I mean, it's going to be positive from both ends because they need that. The small caps, as I said, are particularly strong on a percentage basis. They have not yet exceeded their own March 25th highs. They were beaten down terribly. They've had a big spring back, but we definitely have some sunshine between present price levels and that peak. The cubes are also up, kind of in the middle, between, say, the spiders, the ES, which is up about 1 1/3. The small caps are about 2 1/3. Cubes are kind of in the middle. And we look here, and we are very close, like pennies away close, from besting that March 25th high. It could happen before the close, and it could easily happen tomorrow morning. Apple, one of the biggest components out there, of course, maybe the biggest company in the world. I've lost track, but it's got a goodly amount of distance between its own gap. This is one of the more damaged charts out there, to be sure. So you can see that it's well below its own lifetime highs. And as I say, the damage is pretty nasty because we're below this important channel midline. And even with all the bullishness going on, it's been more or less slumping for the past 5 to 6 trading days. Semiconductors got a pop yesterday, late day. There was yet another retreat from tariffs, whereas semiconductors, or at least a class of them, was released from any tariffs. With all the carve-outs and exclusions, I mean, there's like hardly any tariffs left at this point. Sure, 10%, I guess, across the board, but they're in full retreat right now. So the notion that income taxes are going to go away because of tariffs, still mark April 15 on your calendar. Still going to stick around. Some specific semiconductors. NVIDIA, it's up. Not that impressive. It's 1.11%. It's kind of enjoyed the easy part of its bounce, but it's not exactly raging. AMD, also up. It's got its own gap to contend with right there. 108.68. But, on the whole, everything's up, but it's important to recognize like the relative behavior of all these things in the context of all this bullishness. And then one more example, particularly strong Micron, symbol MU, just about sealed on its own price gap at 86.70. One interesting tidbit is EFA. It's red. It's not very red. It's down a nickel, but anything that can be read on a day like this, which isn't a bear fund, is kind of amazing to me. So it sort of suggests to me that whatever the news is being interpreted as not particularly great for outside the U.S., because that's what EFA is. It's basically world equities outside of North America. So the fact that the U.S. equities are just raging higher, and the EFA is sitting around with red on the screen, worth noting. The peak on this was a few days ago, 86.47. So we'll see what happens there, particularly after this weekend, a very important weekend. Carvana is a good example of how it's easy to get faked out after hours. I was toying with the idea of shorting Carvana because they had earnings yesterday afternoon. I decided not to. And I was kind of kicking myself because they announced earnings and the stock plunged. It's like, you missed that one, you coward. I didn't feel so bad later because not only did the plunge unplunge, but it blasted higher. So Carvana is up big time and just about matching. It might even have bested its peak from February 19. So here on the daily chart, you don't see any of that plunge. This was after hours stuff, but it gapped higher today and went ripping up toward its peak from Feb 19, which was pretty much the lifetime high for all indexes. Some other odds and ends. Netflix also down a little bit. Weirdly, this has behaved as sort of a safe haven, so maybe that that's not as needed anymore, just like gold's down today. But for whatever reason, Netflix is very, very lofty, of course, very richly valued. The PE on this, well above 50. And, from this channel perspective, it's not cheap. And one other example, also down a little bit, is Costco, which has managed to seal its gap nice and neat and has stayed under it for the past 5 trading days. Worth noting. Also quite expensive on the fundamental side. The Bitcoin crowd has their 6 figures back. This had fallen from inauguration day of about 118,000 all the way down to about 77,000 and has climbed up by about 30,000 or so. So we're into the 6 figures again. A lot of excitement there. We're range bound at this point until it crosses above that. I beg your pardon, it wasn't 118, it's about 109. But in any case, the inauguration peak, once that is shoved aside, which might be a foregone conclusion, then we can talk, then the sheer optimism and volume, I suspect, will rage on that because those lifetime highs are cleared. We've got a very upset puppy. Hang in there, kiddo. Almost done. Strategy, of course, Michael Saylor's company enjoying the Bitcoin rally because their assets are pretty much all Bitcoin. So MSTR is up almost 6%. On the other hand, gold is down pretty hard. The front month is down almost $100. The peak stands from back in around April 22. So this is pretty obvious. The whole need for a safe haven has vanished because the trade talks, or at least how they're being received, is going so well. Equities are raging, and people are ditching the safe haven of gold in exchange for, Palantir and so forth. XME, the ETF dedicated to mining stocks, is also up somewhat. It's a pretty sloppy pattern. The next important resistance is this line right here, round about 60. How are we doing on time? We're doing okay. A couple more minutes to go. Oil, strong day again, based upon trade talk optimism. Crude oil is up about 3 1/3% on the front month. USO, its own gap is right like so, 67.17. That's the next meaningful resistance on oil. XOP is up just about the same amount percentage-wise, and it's getting interestingly close to its important price gap here, 119.36. That was set back here between, good heavens, between April 3rd and 4th. Actually, was that 2nd and 3rd? It should be. Let me just see. April 3rd and 4th. Big price gap there. It's taken some weeks, but we're just about sealed, and it might represent a trading opportunity because that is a gorgeous head and shoulders pattern, and it's taken some time and a lot of buying to get back up here. We're just about to seal that gap. One other item, since we're all gap happy here, that I really continue to like is XLB. 85.50 remains the stop on that. We got close, but did not violate it today. So that's definitely one of my favorite, if not by far my favorite ETF position. In the few moments we got left, just bang through just a couple of index charts here. The CompQ, close, but not crossing yet its March 25th peak. NDX, NASDAQ 100, same deal. Very, very close to pushing past that peak. It might do it before the close, but not quite there yet. S&P 500, the cash index, a little bit more sunshine between March 25th and present price levels. Getting very close on that too. And lastly, kind of an upside down of all this, volatility continuing to sink, having peaked right back here on the 7th at almost 60. We're getting down to about a third of that now. And there's the next support on that, 20.68. Pretty empty day tomorrow. Nothing really on the blotter in terms of scheduled events, but of course the weekend